Robin, explain to me the rally that we're seeing in base metals today.
Good morning. Yeah, the bounce, unexpected perhaps, but maybe a classic case of sell the rumour, buy the facts. The micro fundamentals, in our view, are pretty strong as we enter the fourth quarter shortly, which is traditionally a strong seasonal period for demand. If we look at some of those micro details, stocks are continuing to draw. Cancelled warrants indicating how much metal is leaving the warehouses is on the rise, and imports from China, despite all the fears about trade wars, about slower growth, still remain at elevated levels. So some very strong micro factors for the various metals.
Which, Robin, to your point, the market has been ignoring up till now. If you come inside the Bloomberg here, you can see over the last year to date all these industrial metals. And the point you have to know is that they're all down. That's the takeaway from that. The worst off is that pink line, that zinc. You also have copper is that white line, and then iron ore in China is that blue line. So which metal is most decoupled from its fundamentals, Robin?
We would argue probably things like aluminium, because of specific factors that could be supportive, particularly the ongoing sanctions with Rusal. I would point perhaps to lead used in batteries. That's relatively immune to the business cycle. If a battery fails, that has to be replaced in your automobile, in an industrial location. So lead would be relatively more resilient. Nickel as well, perhaps, because of all the talk about electric cars and trucks needing the lithium-ion batteries, where nickel features very heavily.